All right, so fixed range volume, my favorite trading indicator. I use it a lot. I use it for multiple purposes. It's never like my, I don't know, decision maker, but it's a great confirmation that you can add to your trading. So very quickly, what I use this for, why I use this is basically, what is this indicator? What does it show you? It shows you the volume behind the candle. So if you draw this tool around this range, it shows you where in this range you have the most volume. So in this scenario, as you can see, this red line or this spike in the volume shows that the most volume is somewhere in the middle. And now if we look at the right, we can see how the price broke below, came back to grab this volume, grab this liquidity before continuing lower. It basically shows you where is the most money sitting in that particular area that you choose to use that tool for. Now, it's not only used in ranges. It can also be a great tool to be used in a push. For example, I use it to find, to confirm on my supply and demand areas. Now, we have this pullback supply that we talked about. And we also have a volume spike right at this. We don't have a volume spike at this level. We don't have a significant volume spike at this level. We have our volume spike right at this pullback supply. And as you can see, boom, 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 boom. We have a strong reaction to the downside, right? So also another thing that I want to pinpoint about this indicator is, let's use this for, I don't know, this move, for example. It's not just about the biggest spike. Also, the other spikes are significant. So, how to explain this? Basically, when those spikes are important, when you have a big spike, then you have a die down, a fall in volume, and then you have another big spike. So not only the biggest spike is important, is the second to biggest and the third to biggest spikes are important. So you should pay attention not just to the biggest spike, but to the whole indicator as well. So now if you have a zone here, as you can see, let's say we have this indecision candle, right? As we talked about in indecision supply and demand. Let me delete this so you can see, right? Indecision candle. We use this tool just for one single phase. We can see how we have a spike, but we have a spike here on this distribution supply and demand, right? So you can take that to your advantage. Now you have this respect, you have this fake out, you have this respect. Once again, I want to come back to this, to the presentation. Okay, so I use it for supply and demand areas and areas like support and resistance, and you should always focus not just on the biggest spike and the other spikes as well, right? So things to know about this indicator: you never make decisions based just off indicator. Indicators is your confirmation. Indicators is your support towards your trading setup. It is not your decision maker. Your decision maker is you. Your decision maker is price action. Your decision maker is candles and patterns. Your decision maker is never an indicator. It is never 100% perfect. If you see a volume spike, it doesn't mean that the price is going to resist that level. Now, this is why it's not your decision maker. For you to decide if the volume spike is, for example, it's valid, you need to wait and base your trading based on facts. You need to wait to see how the price reacts to that volume before making any decisions. It should only be used with purpose. So if you have a zone and you want to see if there's much volume in that zone, only then you use that indicator. You shouldn't be drawing that indicator just to have it on your chart, because it's going to bring just more mess to your trading. And another, again, important thing, the indicator should help you to confirm the zone is correct and not to help you find the zone. So first you find the zones, first you find your entry levels, and then you use indicator to support that level or adjust it. Where you can find it, go to Trading View, tab. Here we have a tab on the left. Let me get out this drawing tool. Here we have this tab on the left, this tab right here. You click this little arrow, and you look for fixed range volume profile, and I would suggest you to add it to your favorites. Click this little star and it's gonna pop up on your chart and you're gonna see it at all times. To use it, just drag it, you click on it and then you drag for the area of the candles you want to use it for, and it's gonna pop up with the volume. Use it as confirmation. In this example, you can see how first I found my supply with indecision candle right here. It's already circled. And only then I use the tool to drag it for this single phase of the market, right? Your focus shouldn't be just on the biggest spike, but on other spikes as well, like I talked about on the charts. So right here, I circled them as well. We have the bigger spikes as well, not the biggest one. And as you can see in this example, the one that was respected wasn't the biggest spike, it was this spike right here. Now, like I said, do not drag it all around the chart. It's gonna bring a lot of mess and a lot of noise to your trading and to your charts. Instead, what you want to do, you want to use it for a single phase in the markets. What do I mean by single phase? Here you can see I have identified different phases in the markets on this chart in the image. You can see that we have a push, so basically the price was pushing higher. This is a one phase. Then the price started consolidating. This is the other phase. Now the price had another push. This is the third phase. Then the price had a push to the downside, and this is another phase. Now you don't want to drag the tool all over this. Instead, you want to drag the tool one phase, other phase, third phase, fourth phase, and then you're gonna have much more clarity to your charts rather than dragging it all along. So basically, the way you drag this tool is from this point to the end of this push right here, from the start of consolidation to the end of consolidation, or from the start of the push to the end of the push, or from the start of the push to the downside to the end of the push to the downside, right? Simple as that. Once again, I'm going to show you how to drag it. Here, the way you use it, you identify different phases of the markets. You can identify this as our push to the downside, like this push, right? So this is a push phase, and that's how you do it. You drag it from the left, from the start of the push, to the right, to the end of the push. You click it out once again, and then here you have it. The same thing happens here. This is our start of the push to the downside. This is our end push to the downside, right? We can all agree on that. That's how you drag it. From the start of the push to the end of the push. And here you have it. Now, you have it with a pullback demand or supply. And as you can see how well it grabbed the liquidity and continued it move higher. Let me mark it up some more so it's more clear to understand. Right, so we have another phase, start of the push to the downside. So start to the end. Then we have consolidation, which is right here. So we drag it from start of the consolidation to the end of the consolidation. We have another push phase. So from start of the push to the end of the push. Here we have it. So basically, look, we have another distribution, supply and demand, and look how well this was respected and how well it played out. So once again, I did not use this to identify my zones. First, you identify your zone, and then you can check if it's valid by identifying the phase using the tool, and you can see, oh, nice, we have this. Or let's, for example, if you use this zone, if you like this zone as a pullback zone, you can also do the same thing and see, oh, I have a spike. So we have one spike, two spikes, three spikes, and this zone is right on the spike. You would have been able to look for longs right from this position. Simple as that.